Most people are asking the same question right now. Is the housing market getting better or is it getting worse? And the honest answer is it depends on what part of the market you're looking at. Mortgage rates are better than they were the past few spring markets. Buyers are still active, sellers still have equity, homes in DuPage are still selling, but the market is also less forgiving than it was a few years ago. And that's the part I want to talk to you about today. Because if you're a buyer, this market may give you more opportunity than you realize. If you're a seller, this market may be strong, but this is not a market where you can ignore price, presentation, and strategy. So today, let's walk through what the data is actually saying, and more importantly, what it means here locally in DuPage County and surrounding Chicagoland suburbs. Let's start with mortgage rates. This is usually the first thing buyers want to talk about, and for good reason, because rates have a major impact on monthly payment. According to this data, a $400,000 loan at 7.26% had an estimated principal and interest payment of about $2,731. At 6.52%, that payment drops to about $2,534. That is a savings of about $197 per month. And at 5.99%, the payment drops even further. Now, does that mean that homes suddenly feel inexpensive? No, it doesn't. Does it mean that affordability is finally solved? No, but it does mean that the payment conversation has changed, and that's what matters. Because most buyers are not shopping based on the price of the home, they're shopping based on the monthly payment that they can actually live with. The mortgage payment, the property taxes, insurance, possible HOA dues, maintenance, utilities, all of this matters. So when rates improve, even just a little bit, some buyers may start to feel more comfortable re-entering the market. Some may even be able to look at homes that were previously ruled out, and some may simply feel like the numbers are a lot more manageable. So here's the part that I think most buyers and sellers both need to understand. Most forecasts are not showing a dramatic collapse in rates. The projections in this report show rates are staying roughly in the low 6% range over the next several quarters. So if someone is waiting for rates to suddenly drop back to levels we saw a few years ago, that might not be the best planning strategy. Could rates move? Of course. Rates change based on inflation, the economy, the Federal Reserve policy, employment numbers, and even investor confidence. But based on current forecasts, the message is not wait till everything gets easy again. The message is understand the payment, understand your options, and make a decision based on your real situation. That applies to buyers and also applies to sellers. Because when buyers are payment sensitive, sellers need to understand how to price their home better so that it impacts buyers' behavior. So let's bring this home to DuPage County. Because national data is helpful, but real estate is local. According to Zillow's DuPage County housing market data, there were 1,636 homes for sale as of April 30th this year. There were 914 new listings and a median sale price of about $396,666. The median list price was about $439,800. And homes are going pending in about 6 days. Someone says, is anyone selling? The answer is yes, homes are absolutely selling. But that does not mean that every home is selling the same way. And that is an important distinction. The local market is active, but it's also selective. So homes are moving quickly. Some homes are getting more attention and stronger buyer attention. Some homes are selling over list price, but other homes are sitting and getting price adjustments. And that's where the broad headlines can be misleading. The real question is not how is the market. The better question is, how is the market for this specific home in this specific price range, in this specific condition, in this specific town? That's where the real answer is. Redfin's DuPage County data also shows that local prices have remained strong. In March 26, the median price was $420,000. That was up 7.7% over last year. There were 771 homes sold, and the median days on the market was 45. So again, this does not look like a market that has stopped. It looks like a market that is still moving, one where buyers are being more careful. That's one of the biggest differences between this market and the market we saw a few years ago. During the past market, many buyers felt like they had very little time to think. They had to move quickly. They had to compete aggressively. They had to accept more risk. But today, buyers still have to compete for the right home, but many buyers are also looking more closely at value. They're watching days on market. They're watching price changes. They're comparing condition. They're calculating payment. They're asking themselves, does this home make sense at this price? And that is a question sellers need to be ready for. This is one of the most interesting slides of the report. It shows that 8% of sellers think they're going to get their asking price or more. And honestly, I understand why sellers feel this way. Many homeowners have watched their values rise over the last several years. They've heard stories of multiple offers. They know someone who sold quickly. They have a neighbor who sold for above list price. And in many cases, they have built significant equity. So seller confidence makes sense. But confidence still needs to be balanced with strategy, because buyers today are not blindly chasing every listing. They're comparing options. They're looking at payment. They're watching what sits, and they're paying close attention to when a home feels priced correctly right from the beginning. This national data shows that homes are selling for less than list price. In 2025, the chart shows that 62% of homes sold for less than asking. That does not mean that homes are not value. It doesn't mean that sellers can't do well. It simply means that the market is not treating every listing like it did during the most competitive years. That is exactly why pricing strategy matters. When sellers hear that homes are still selling, that's true. When sellers hear that values are still strong, this is also true. But the missing piece is, how will buyers respond to your home at your price? And that's where strategy becomes the difference. Now let's look at the local version of the same idea. Here's Zillow's DuPage County data. It shows that 36.5% of sales were over list price, but 53.4% of sales were under list price. And the median sale to list ratio was 99.3%. That is an important local advantage. DuPage County is still active. Homes are still selling, but more than half the sales in this data were under list price. That doesn't mean sellers were losing. It means that buyers were evaluating. It means the first price matters. It means preparation matters. It means presentation matters. And it means sellers need to be very careful about assuming that every home will automatically sell for more than asking. Some homes will, some homes won't. The difference comes down to pricing, condition, timing, competition, and how the home is positioned from day one. This report includes a quote saying that the listing price is one of the first details buyers notice when they're browsing properties. That's important, because today's buyers are seeing the home online first. Before they walk through the door, they're looking at the photos, the price, the location, the taxes, the estimated payment, and the competing homes. If a home is priced well, it can create more interest. It generates more showings. It can create a stronger first impression. But if a home is priced too high, especially compared to similar properties, buyers may hesitate. Matter of fact, they may skip it altogether. They may wait until we're more reasonable, or assume that the seller is not even realistic to work with. That doesn't mean you should underprice a home. It means you should price it with the market, not with emotion. This may be one of the most important slides for sellers. This data shows price cuts tend to get bigger the longer a listing sits on the market. The first 0 to 14 days, the average reduction is shown as 4.9%. After more than 120 days on the market, the average reduction is shown at 13.8%. That is a huge difference. And that is why sellers need to think more carefully. When a home is being overpriced at the beginning, the seller may not just lose time, they may lose leverage. Because when buyers see a home sitting, and then they see price cuts, and then they continue to see it sit, they often start to wonder, what am I missing? What's wrong with it? Why has no one else bought it? And sometimes there's nothing wrong with the home. Sometimes the issue is simply the original pricing strategy. This next slide makes that even easier to understand. It shows an example of a home listed at $400,000. Based on this chart, the longer a home sits, the lower the average sale price becomes in this example. Again, that doesn't mean that every individual home follows this exact path. Every home is different. Every town is different. Every price point is different. But the principle is very real. The first few weeks matter. The first impression matters. The launch strategy matters. And the price you choose at the beginning can affect how buyers respond throughout the entire listing. That's why the goal is not simply try a high price and see what happens. The better goal is to create a launch strategy that gives the home the strongest possible chance to attract the right buyers early. Now let's connect that to DuPage County. Realtor.com's DuPage County housing market showed 2,157 active listings. The median listing price was $449,900. The median days on market was 25 days. The sale to list price ratio was 99%, and inventory was up 6.58% year over year. That matters because more inventory means buyers may have more options. And when buyers have more options, sellers need to be more intentional. That doesn't mean sellers should panic. It means sellers should prepare. The homes that are clean, well presented, properly priced, easy to access, and marketed well are still in a much better position. The homes that miss on price, need obvious work, or do not show well online may struggle more than headline numbers may suggest. That is the local reality. The market is not bad, it is more competitive, and in a more competitive market, strategy matters more. This quote is important because it describes something that buyers do all the time now. They track listings. They notice when a home sits. They notice when a price changes. They notice when a home comes back on the market. They notice when the photos change. They notice when the listing feels stale. And once buyers start to question a listing, it can be hard to get that momentum back. That's why your first launch is so important. Your pricing strategy, your presentation, your professional photos, your marketing, your timing, your local data, it all needs to work together. Sellers don't need perfection, but they do need a plan. Now let's talk about foreclosures because that's where the headlines can sound scary. And yes, data shows foreclosure activity is rising, and we shouldn't ignore that. Some homeowners are feeling the financial pressure. The cost of living is higher. Some people are dealing with job changes, debt, rising expenses, or life transitions. But one rising chart does not tell the whole story. Context matters. When you zoom out, today's foreclosure activity is nowhere near what we saw during the housing crisis. And that distinction is important because a lot of people hear the word foreclosure and immediately think of 2008. But today's market is different. The lending environment is different. Homeowner equity is different. Inventory conditions are different. And many homeowners have options that may not have existed during the last housing crisis. So the better takeaway is not foreclosures are exploding. The better takeaway is some financial stress is showing up, but it is not the same market we saw in 2008. That is a very important difference. This slide also matters because it speaks to how people feel. More than 3 in 4 Americans reported that they do not feel financially secure. The top reasons listed were the rising cost of living and the current state of the economy. The emotional backdrop matters because real estate decisions are not made on a spreadsheet. People are asking, can I afford this? Is now the right time? What happens if rates change? What happens if prices change? If I sell and can't find the next home, what happens then? What if I wait and things get more expensive? These are not just market questions, these are life questions. And that's why the role of good guidance is not to pressure someone into moving, it's to help them understand their options clearly. This slide shows that buyers are adjusting to higher mortgage rates. In the fourth quarter of 2025, 21.9% of mortgages had rates of 6% or more. That tells us something more important. Buyers have not disappeared. Many have adjusted to the reality of the rates that are being higher than they were just a few years ago. But adjusted doesn't mean careless. Today's buyers are often more payment sensitive. They are more selective. They're more likely to compare. They're more likely to ask whether the home justifies the price. So sellers need to understand that the buyer pool is still there, and the buyer mindset, that is what changed. Buyers need to understand there may be more opportunities in the homes that are sitting, homes that have had price adjustments, or homes that are being overlooked because they need some updating. The opportunity is not always obvious at first glance. The final piece of the story is homeowner equity. This report shows that roughly 2/3 of homeowners either own their own home free and clear or have at least 50% equity. That is a major reason why this market is different from the last housing crisis. Equity gives homeowners options. It can help someone sell instead of falling into foreclosure. It can help someone right size. It can help someone move closer to work or family or a different lifestyle need. It can help someone use the value that they've built to make their next move possible. And for sellers in DuPage County, that's often the real question. It's not just, what is my home worth? It's, what would I actually walk away with? What would my next home cost? What would my next new payment look like? Does moving make sense for my next chapter? These are the questions that matter now. Locally, Zillow's DuPage County data showed a typical home value of $437,712. That was up 4.7% year over year. And homes are going pending in about 6 days. So again, the local message is not that the market is weak. The message is the market is strong but selective. There is value, there's activity, there is buyer demand, but there's also more scrutiny. And that means people need to have a clearer plan, more so than they've had in the past few years. Buyers need to understand their payment, their timing, their comfort level, and where opportunities may exist. Sellers need to understand their competition, their pricing, their presentation, and their net proceeds. The people who make better decisions in this market are usually the people who are looking at the full picture. Not just one headline, not just the rate, not just one estimate, the full picture. So here's the simple version. The market's not crashing. The market is also not easy. The market is not the same for everyone. Rates are better than they were in the past few spring markets. Buyers are still active. DuPage County home values still remain strong. Sellers have equity, but pricing strategies matter more. Presentation matters more. Local data matters more. And understanding the difference between national headlines and your specific situation matters now more than ever. So if you're thinking about buying, selling, or just trying to understand what your options look like right here in DuPage County or the surrounding Chicagoland suburbs, the first step is not guessing, it's looking at the numbers clearly. It's understanding your options and applying it to the market with your actual goals. That is where the market starts to make a lot more sense. I'm John McGleam with Greene Realtor. If you're trying to decide what this market means for you, I'd be happy to help you look at the numbers and talk through your options so you make a much more informed decision.